Imagine waking up tomorrow and realizing you haven't touched physical cash in an entire year. No bills in your wallet, no coins in your pocket, no visits to an ATM. Every payment, every transaction, every investment, every financial decision happens through a screen. For millions of people around the world, this isn't a prediction anymore. It's already reality. Just 20 years ago, sending money internationally could take days. Applying for a loan required piles of paperwork. Investing in stocks was something most people associated with wealthy professionals in expensive offices. Opening a bank account often meant standing in long lines and waiting for approval. Today, a teenager with a smartphone can transfer money across continents, invest in global markets, start a business, and manage an entire financial portfolio without ever stepping inside a bank. This transformation has a name: fintech. Financial technology has quietly become one of the most powerful forces reshaping modern life. It is changing not only how we spend money, but how we earn it, save it, borrow it, invest it, and even how we define it. The fascinating part is that most people don't notice it happening. Every time you tap your phone to pay for coffee, use a digital wallet, send money through an app, or receive an online payment, you're participating in a financial revolution. And according to many experts, we're still only at the beginning. Consider how banking worked for most of human history. Banks controlled access to financial services. They held your money, approved your loans, processed your payments, and determined what financial products you could access. For decades, this model changed very little. Then smartphones arrived. Suddenly, technology companies realized something important. People weren't frustrated with money. They were frustrated with the systems surrounding money. Long waiting times, high fees, complex paperwork, slow international transfers, limited access to investment opportunities. These weren't financial problems. They were technology problems. And technology companies began solving them one by one. When digital payment platforms emerged, they made transactions faster and simpler. When mobile banking apps appeared, people gained access to financial services 24 hours a day. When peer-to-peer payment systems launched, sending money became as easy as sending a text message. The result was a shift in power. Financial services were no longer tied to physical locations. They became digital experiences. One of the biggest examples of this transformation can be seen in developing economies. For decades, billions of people around the world remained outside the traditional banking system. Not because they didn't need financial services, because they couldn't access them. In many regions, bank branches were too far away, documentation requirements were too strict, or operating costs made services impractical. Then mobile financial platforms entered the picture. Suddenly, people who had never owned a bank account could store money, receive payments, pay bills, and participate in the digital economy through a smartphone. Entire communities gained financial access for the first time. This phenomenon is often called financial inclusion, and it may become one of fintech's most important achievements. Because when people gain access to financial tools, they gain access to opportunities. They can save more effectively, they can start businesses, they can build credit histories, they can participate in economic growth. The future of money isn't just about convenience, it's about access. Another major shift is happening in the world of investing. Historically, investing was considered complicated. You needed knowledge, capital, and often professional assistance. Many people felt excluded before they even began. Fintech changed that equation. Investment platforms started offering fractional ownership, allowing people to purchase small portions of expensive assets. Automated investing tools began helping users build portfolios based on their goals and risk tolerance. Educational resources became widely available. As a result, millions of first-time investors entered financial markets. Technology reduced barriers that had existed for generations. The same pattern can be seen in lending. Traditional lending systems often rely heavily on lengthy approval processes and rigid evaluation criteria. Fintech companies introduced alternative approaches. Using data analysis, machine learning, and automated risk assessment, many platforms can evaluate applications faster than traditional methods. What once took weeks can now happen in minutes. For small business owners, this can mean the difference between missing an opportunity and capturing it. For individuals, it can mean faster access to critical financial support. But perhaps the most controversial conversation surrounding the future of money involves digital currencies. For centuries, money has existed in physical forms controlled and issued by governments. Today, entirely digital alternatives are challenging traditional assumptions. Cryptocurrencies introduce the idea that value could move globally without relying on conventional banking infrastructure. Supporters see greater efficiency, transparency, and financial freedom. Critics point to volatility, regulation concerns, and security risks. Regardless of which side someone supports, one thing is clear. The conversation has permanently changed. Governments, central banks, financial institutions, and technology companies are all exploring what digital currencies could mean for the future. Some countries are researching central bank digital currencies, often called CBDCs. These systems aim to combine the efficiency of digital payments with the stability of government-backed money. If adopted widely, they could fundamentally alter how people interact with national currencies. Imagine salaries arriving instantly, tax payments processed automatically, government benefits distributed directly through secure digital wallets. These ideas may sound futuristic today, but many pilot programs are already underway around the world. Artificial intelligence is also becoming deeply connected to finance. Banks and fintech companies increasingly use AI to detect fraud, assess risks, personalize financial advice, and improve customer experiences. Every second, enormous amounts of financial data are generated across global markets. Humans simply cannot analyze everything. Machines can. AI systems can identify unusual transactions in milliseconds. They can help prevent fraud before damage occurs. They can recommend budgeting strategies tailored to individual users. They can even assist businesses in forecasting future financial performance. As AI capabilities improve, financial services may become more personalized than ever before. Instead of generic advice, people could receive guidance specifically designed for their goals, habits, and circumstances. But with every technological revolution comes new challenges. Privacy remains one of the biggest concerns. The more digital our financial lives become, the more data is generated. Questions arise about who owns that data, who can access it, and how it should be protected. Cybersecurity becomes increasingly important. A single security breach can affect millions of users. Trust, which has always been central to finance, must now be built not only through institutions, but also through technology. Regulation presents another challenge. Innovation often moves faster than laws. Governments around the world are working to balance progress with consumer protection. Too little regulation can expose users to risks. Too much regulation can slow innovation. Finding the right balance will play a major role in shaping the future financial landscape. Despite these challenges, the direction appears clear. Money is becoming increasingly digital. Financial services are becoming increasingly accessible. Technology is reducing friction in nearly every aspect of financial life. Future generations may find it difficult to imagine a world where opening an account required paperwork, where international transfers took days, or where investing was reserved for a privileged few. For them, instant payments, digital identities, intelligent financial assistance, and borderless transactions may feel completely normal. Just as internet access transformed communication, fintech is transforming finance. And perhaps the most important lesson is this: the future of money isn't really about money. It's about empowerment. It's about giving individuals greater control over their financial lives. It's about creating opportunities for people who were previously excluded. It's about making financial tools faster, smarter, and more accessible. Every major technological revolution changes how society functions. The printing press changed knowledge. Electricity changed industry. The internet changed information. Fintech is changing value itself. The question is no longer whether the future of money will be digital. The question is how quickly that future will arrive. And when it does, will you simply watch it happen, or will you be part of shaping it?